In this video, I want to continue the conversation from yesterday regarding Trump's proposal to have 50-year mortgage loans. And specifically, I want to talk about this and how it relates to VA loans. As most of you know, I am a VA specialist. And so I think it is important that we do relate this to the VA home loan program. And so the question of the day is the 50-year term, proposed term, good for VA loans? And so again, what I mentioned yesterday, this is the only proposal. It's currently proposed for conventional loans, but typically and it's not even a proposal on the VA side, by the way, but VA tends to follow conventional. So conventional does something on that side for Fannie Mae, Freddie Mac. Typically, VA will follow. That's just how things work in the mortgage space. And so I think it is important that we do take a look at this and see if it does make sense for the VA home loan program. And so for the rest of this video, I want to talk a little bit about rates, and I'm going to actually give a quick example of a potential scenario so you can understand fully exactly what the amortization looks like and exactly what the math is, because I did all the math for you. But before I do that, I do want to let you know this is not an offer to lend, educational purposes only. My compliance guy wants me to say that, so I have to put the little screen up just so you know. Educational purposes only, not an offer to lend. Okay, cool. That's out of the way. Press the button. All righty. So let's run the numbers here. Let's do the math, right? So let me flip over to this. First thing you need to know when you do a VA home loan is there's something called a funding fee. It's a one-time fee because there is no monthly PMI. There's a one-time fee called a funding fee, and that is rolled into the loan. So in this theoretical example, if you are borrowing $300,000, your funding fee would be $6,450, and the total finance would be $306,450. Pretty simple, right? Now let's take that off and look at the math, because that's what we really need to know, right? How long would it take you to pay off that $306,450? What is that break-even point? And you're saying, well, real estate goes up. Yeah, real estate usually goes up unless it doesn't. Real estate's always gone up this percentage unless it doesn't. So let's look at the actual break-even point here. So $306,450, and especially your active duty. I mean, you're only staying there, what, 4 or 5 years? After 5 years, that balance is only at 301. You haven't even paid off the funding fee yet. Even worse, you haven't even covered the realtor commission yet. So you have to factor that in too. So realtor commission typically is 6%. You also have to factor in closing costs. Typically there's title fees you got to pay, that kind of thing. So your net is around 279. I already did the math. So 93% of 300,000. So say you bought the house for 300, you resold it for 300, you would net 279. So question of the day. What would it take to get that loan down to 279? Well, we got a chart right here, right? So this is a 50-year amortization schedule at that 6.25% rate. So you're looking at about 18 years into the loan to get that 279, which is kind of insane. Because especially, if you're active duty and you only know that you're there for 5 years, do you want to depend just on appreciation to make that up? And very well could be the house will appreciate so much that you make that up. But the question is, what if it doesn't? What do you do? Are you able to cover that loss? And so for me, I'm saying this is bad. I'm going to throw the business bad thing up here just because I can. And so personally for me, I'm going to start recommending that even if the 50-year term becomes an option, I'm still going to be recommending people, for the most part, do 30-year terms. Like anything in mortgage, there is nuance in certain situations where maybe you could do a 50. Like, for example, maybe you're on commission, you have bonuses, or you have a big pay increase coming up. But for the average person that's working a 40-hour job, just regular paycheck to paycheck income, it's incredibly risky, I think. But I don't know your thoughts. Comment below. Tell me what you think about this. Is a 50-year mortgage a good idea? What are your plans if this actually passes? I would love to know. As always, if you have any questions about mortgages or really anything in particular, feel free to give me a call. My number is 937-572-3713 or Scarpero.com. Talk to you soon. Bye.